Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. And of course, I'm coming to you still from a cruise ship somewhere in the Gulf of America / Mexico, whatever you want to call it. We can call it that. But let's focus on the charts today. All right. So where are we? We're seeing the markets relatively quiet this morning initially, but we do have a lot of earnings movers, and the PPI data is just about to come out. So we're going to get into the charts here. I want to go through, obviously, the S&P. We'll look at the dollar. We'll look at the 10-year yields. Then I want to get through the earnings announcements here that are making major moves in these big name stocks. And then we'll focus on what the reaction is to the PPI data that'll just be out in a few minutes. All right, so let's flip it right over. Here's the S&P 500. And again, if we look at the S&P 500, what are we seeing? We're seeing, again, the markets closing yesterday right here. Look at how close we are to the flat line. So again, we are basically flat on the morning session. Not much going on there. All right, so that's the key right there, is quiet. And everyone here, in my humble opinion, is waiting for that PPI data. Now, PPI, let's be clear, guys. What is PPI? For those of you that maybe are newer, PPI is Producer Price Index. It's the gauge of inflation on the producer side. So yesterday we got CPI, consumer inflation. Today we're getting the inflation on the producer side. Producer generally is not as important, but I do think that if the markets get an inline or slightly better number, there will be a sigh of relief and potential rally. If it's hotter than expected, confirming the CPI yesterday, then the markets could see a big drawdown. All right. Yeah. Now, yesterday, let's be fair, we did have that big drawdown. And then what did the markets do? They floated up, by the dippers coming back in. Impressive, to be fair. The other thing to kind of keep an eye on here is you can see the buy the dippers just continuing to come back in. Here was a dip. This was on Monday, the 27th of January. This was on Monday, February 3rd. The gap down on the daily chart of the S&P and the rally up the rest of the week. And then here, same thing. This week, we'd actually had a gap up on Monday, but a little bit of a sell-off open yesterday, but rallied back again. So the buy the dippers are still out there. That tells me there's a lot of liquidity in the system, and that really reinforces there's no doubt why inflation isn't really going down. In fact, it's going up because there's just too much liquidity in the system. Even bad news like higher inflation is really not causing the markets to sell. Now, on a technical basis, we have this level right here. We could see that, again, this was your December high. We retested it. We even closed above, but never confirmed. We pierced it, and we kissed it right here. If we can get above this line and confirm, I talked about this in yesterday's game plan, we head up to this line up here. If we come down, this is going to be your technical support at around 5,900 on the S&P 500. In this case, about 5,589 or so on the SPY. If that breaks, we'll start testing some of these lower pivots. But again, as I said before, a break of this lower trend line breaks the overall grinding uptrend in the market that's lasted since 2023. So that would be significant to me. Okay. All right. Quickly looking at the 10-year yields, which had a big rally yesterday. And if we look at that, so far 10-year yields are down just a little bit this morning, but that's all subject to change in about 5 minutes when the PPI data comes out. All right. So again, great move up, great close yesterday. Again, we closed below the line, never confirmed, so it wasn't a confirmed breakdown. Sure enough, what happens? It easily gets back above that line. Confirmation, again, is something that every investor should know. It changes the game. All right, now, again, small downtick right now. The question is, do we break down on this PPI data, or do we stay above and start moving towards the higher end here? The Dixie, the DXY, you can see, again, we continue to hammer on the neckline of the head and shoulders. The neckline of the head and shoulders, a daily close below, triggers the down move. All right, let's go to some of these earnings moves. Take a look at this, guys. This is the trade desk. And again, look at how far it's trading down at $86.30. Yesterday, it closed at 122. This is actually extremely oversold. I do think it's due for a bounce down here. We'll go over some levels. But on the 10-minute chart, look at the drop on earnings and just continued grind lower. That's pretty impressive, in fact, to see that move to the downside. Now, on a daily basis, we're into a ton of support. Look at all these highs, pivot, 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 pivot area here, low here, and right in here. Now, it could go lower. I guess you could go down to about 77, somewhere in this vicinity. But really, as it's down 30% on the day, and it would be expected, at least I expect, a bounce back into the low to mid 90s at some point today. Doesn't mean it'll happen, but that's what the charts would indicate. If by chance it gets down to 77, 76 right down here, I actually like it as a swing trade. Here it's more of a day trade. Down here it's more of a swing trade. Robinhood coming out with blockbuster numbers. This stock was up into earnings, but this is really interesting, right? So the stock is off of its after hours highs. You can see the big move up to almost 60, well, about 66 and a quarter. It has faded to about 63.35, still up nicely on the day. But this was the kicker. They had amazing earnings because of the official Trump coin that launched, the meme coin, and crypto overall. Now, the problem with that is that if we see crypto getting quiet, which it has gotten quiet now in the new year, and let's say it doesn't get more active, then you could be looking at Robinhood's profits coming right back in and the stock could sell off. I happen to be in the camp that this stock is extremely overbought. I mean, look at this move up. It was hammering on this line. It'll gap above. Would not shock me to see within a few days it come back in to this level. APP, wow, this is an amazing chart, guys. So this was APP, but ahead of earnings, and I want to show you the after hours. Look at this run up from basically a closing level yesterday of around $380. It ran up to almost 500. It's been chopping sideways, trading at around 487. Look at this. See this line right here? This is a line right here. This is of a parallel. And if we look at this, this is what I'm looking at here. All right, low pivot to low pivot, high pivot, and this would be anticipated as major resistance. Now, listen, on a $500 stock, could it go to 506, 508? I mean, yeah, it could do anything in that range, but this would be where I would start to say, okay, this is major resistance, extremely extended. And again, the chart, just incredible move. On to the next one, Datadog reporting earnings, getting crushed here on earnings. Yesterday closing at around 154, trading at 134 now today, so down about $20. If we take a look at the chart, the big level is going to be, there's a huge amount of support around 131. See all these highs right in here, 131 right there. That is going to be a big level. And then you also have a level with a down sloping trend line here. If we look at this, right, you have kind of 131 to 128. So anywhere between a flat top here, right, 131 down to about 128, there should be significant support there. And again, remember, these are short-term levels, not long-term. I have no idea where this stock will be in 6 months from now. It could be down another 30%, 50%. It could be up 50% for all I know. These are short-term levels that I'm going over. All right, Deere, this one was interesting, folks. So Deere falling on earnings. They're basically saying that prices of grains have been so low that the farmers are no longer buying tractors. They're just renting them, and the stock is down about $20. It's not a huge move on percentage basis, but for this stock, this is a big move here. All right, so again, we'll keep an eye on that. But today, Deere, you can see it was generally trading to the upside. I'd be looking at 438 as a technical level. It's trading around 440, right around 450. It did get actually down to 434, so it pierced that level that I just showed you on the daily chart. If it comes back in there, there will be some support at gap fill, and then there'll be additional support around 435 and additional support around 427. Okay, so again, for me, because it pierced this gap fill pre-market, I'm not as keen on those. I'm not as big of a fan, so we'll keep that in mind. All right, Reddit got crushed on earnings. It has come back here pretty well, but again, coming down on earnings sizably. That again is the biggest thing is this trend line here. See this trend line? And look at this trend line on the daily. It's the parallel. So right now we're back above it, but let's see where we close. Any close below like 192, and if it confirms that, then that would be a break of the upsloping parallel channel, and a bigger breakdown could be expected to follow. If it stays above this line on a daily close, it could float. I mean, it could stay within this range and just chop around here for a while. And Cisco Systems, again, a big company here. And again, big move up on earnings. So pretty nice move there. In terms of levels, if we zoom out on the chart, we got to zoom out quite a bit. In fact, let's go to the weekly chart here and see what is going on. We had a level at 64 there, but we're above that now. And so really at this point, what do? You have to go back even further on the data front, and it looks like around $70. You see this little flat top right there, a pierce of 70. I think that's probably my first level with the stock trading at 66 and change. It's not undoable for it to get up to that level. That would be the expected resistance on Cisco. All right, so we'll keep an eye on that. But again, that level goes back quite a ways here on the charts. Okay, and again, that's going back to this crazy. What's amazing about this, folks, is on Cisco systems, we're going back to 2000 highs. Now, not the .com highs right here. That was at 80 and change, but we're actually, we're at this first pivot around or getting close to $70 here. A couple other stocks I think are interesting to watch. Keep an eye on Meta, up 18 straight days. I actually think this is due for a sell-off, so we'll keep our eyes on that. 18 up days in a row is probably almost unparalleled on any other chart, so keep an eye on that. I do think that, again, it is very likely that we're due for a pullback day here on Meta, and maybe even a bigger correction. I don't think necessarily bad news on Meta is going to come out, but I think it could be rotation of capital. All the other mega caps aren't at all-time highs. This one is. Maybe some rotation out of Meta, profit taking per the chart, and then we could see, again, this pullback. Maybe some of the other ones do a little bit better. And then lastly, I know you guys ask about Wolf every once in a while. Wolf continues to look good to me. It's just kind of grinding, but this is, again, cup and handle pattern. I love this pattern setup here on Wolf. And again, it's not to say that this is going to be a winner. I have no idea how it will come out, but these are the charts that I focus in on. It's a small stock, only about $800 million market cap. So in general, I kind of like to keep these positions on the smaller side, but I do have a position in this as of now. And again, I continue to look for a move up and an eventual break. Look, parallel, exact high to exact high, low to exact low. It makes sense that we should travel back up to the low sixes. And then if it can break out, again, this pattern, cup and handle, if it can break out, that's where you get legs. But basically, that's what we're seeing there. Now let's get back to the S&P and the dollar here, folks. Here's the dollar. Let's look at the data here coming out. I'm just kind of screening or scanning through. We do have PPI data coming out. It looks like initially the dollar popped and is pulling back. Let's flip over to the SPY here. SPY initially went down and now popping up. Getting the numbers out here, PPI for January, month over month, 0.4%. That's slightly hotter than the expectation of 0.3%. All right, so again, slightly hotter, but it doesn't look like it's as hot as the other data here. So again, that's a small positive. Core was hotter. Okay, so core was hotter. Core month over month was actually equal, but core year over year was 3.6% versus 3.3. So again, these numbers, PPI year over year, folks, 3.5% versus 3.2. So yeah, so again, the markets are inching up a little. The markets don't seem to be too bothered by this, but these numbers are hotter. There's no doubt about it. There's no doubt about it. I mean, the media will try to spin this, but guys, there's no doubt this is hotter information or inflation data. Again, almost every number that I'm seeing here. The only thing is core PPI month over month came in line with estimates, and that again looks to be the only okay thing, right? I mean, aside from that, every other number, PPI year over year, PPI month over month that aren't core up, and even core year over year was up sharply here. So again, that tells us that we are higher on the inflation side. Spiders are still inching up a little bit though. So again, there must be some little bit of relief here, or the buy the dippers are just saying, screw it, let's just buy anyways. And then let's go to the 10-year yield here and take a look at the 10-year yield before I say goodbye to you guys. We'll go through gold and so on and so forth too, and Bitcoin here real quick. Looks like the 10-year yield is inching down. The markets want the 10-year yield down, and that is happening. That's probably why the markets are catching a bid. So basically, it seems like the markets are saying, okay, this is about the same as yesterday's CPI. It's not worse, at least, and that's the positive, and that's the small glimmer of hope. The question is, can the markets sustain the float throughout the course of the day? And we'll have to watch that. All right, gold. Let's take a look at gold real quick here, guys, and then we'll get into Bitcoin and silver and oil. Gold is upticking just a little bit. Still have a doji here. If we take out the high of the doji, you got 3,000 written all over gold. I'm still in the camp that this is the predominant candle right now, which is only slightly bearish. Dojis at the highs of charts, slightly bearish. Topping tails at the highs of charts, much more bearish, right? So this is just slightly bearish. So it slightly favor a retrace on this chart. Silver has been hammering on support here. The positive is this is now putting in a bullish pattern. So this is, I mean, it hasn't broken out yet, but at least it's putting in a bullish pattern, which changes the probabilities of a pullback here to more of a 50-50 or maybe even slight favoring to the upside. Oil, let's take a look at oil real quick here. Oil continuing to move lower, sold sharply yesterday. Your next target is 68.40, $68.40. And take a look at natural gas, guys. It is up into that level. I haven't taken a short position yet, but I will most likely take a short position. So we'll get ready to rock and roll with that here. And that'll be in smart money, commodities, and miners where I take that position there. Bitcoin, let's take a look. Bitcoin was down sharply initially yesterday with the markets, then came back, but right back down today. And I'll tell you, Bitcoin has just gone to sleep. Look at these four candles, almost no movement, and then a little bit more movement here, but still all staying in a line. And again, the question is, what's the next move? And I think Bitcoiners, crypto players, they're all looking for what's the next catalyst? What is the next catalyst here that triggers the next big move? If you don't get something soon, I would be concerned that it does start attacking this $91,000, $92,000 level and could actually break lower. All right, so that's where we are at this point, folks. I'm going to bid you farewell. I got to get into the trading room and start getting ready for the trades for today. We have a lot of action here, obviously. TTD, Robinhood, APP, Datadog, Deer, Reddit, Cisco Systems, and then keep an eye on Wolf. Let's see what happens today. I do like that chart as it's at the low end of that parallel. And again, I still like that overall. And listen, it doesn't mean it's going to be right, needless to say. But charts like that are great, and it has explosive upside potential, which is awesome as well. You guys are awesome. Thank you so much for hanging with me on my vacation here, and I'll talk to you guys soon. Take care.